everyone. Okay, so today Rodrigo and I are going to be talking to you about Square Inc. All right, so a quick overview about them. They are definitely a growth stock. They haven't turned a profit yet, but have been growing really rapidly, doing well in their industry. It has a lot of potential as a stock, but also some risk. And then products and services. So, what does Square do? They are payments and point of sale, both hardware and software. So, a really good article described it as an ecosystem of sellers' tools. If you shop at a small local business, you have probably, used one of these before. So, they make both the hardware, which are, like the card readers that you see there, ways to process payments in a store when you are, making a sale to a customer. But then they also have a whole, slew of software suite tools as well. Everything from, processing the payments to payroll, things like that. You can also get a business loan through their Square Loan program. Some latest news with them, they had their best earnings to date in Q3 of 2020. They went public in 2015, so they've been on the stock market for about 5 years. And then Rodrigo is going to go over some of the financials.
Awesome. Thank you, Molly. Hi, guys. Rodrigo here, and I'm going to be going over some of the financials for Square. Basic financials starting off, revenues are for the trailing 12 months at $7.6 billion and net income of $310 million. Revenue of $7.6 billion is comparable to their competitors in their industry. The biggest competitor right now is Intuit, and they slightly beat them out in total revenue. Where they do beat them out is in net income. Net income for Intuit, they're in the billions. So we're seeing not quite as high of a profitability stretch as their major competitor. For going into things like Cash App and the subsidiaries for Square, PayPal also is the biggest one there. PayPal owns Venmo, and Venmo is, well, not Venmo, PayPal is making a way bigger revenues and way bigger net income. So moving on to stock price, $205.53 is pretty good compared to Intuit and PayPal. It's slightly lower than PayPal, just by about $10. But for Intuit, price is $363, so you can get into Square at a much more reasonable price. And when we look at the price to earnings ratio and earnings per share, you can see that there's a high growth potential, but also an extremely high amount of risk. So it depends on how you want to go about it. We're going to get into the market analysis in a little bit. Well, Molly gives you the positives and I'll give you the negatives after her. One thing to keep in mind, though, is this beta of 2.71. That's a 5-year calculated monthly. It's extremely high. It's one of the highest ones I've been able to find for an actual company that's performing well in the stock market right now. So keep those things in mind while we give you guys a breakdown on why you should or should not buy the stock. Take it away, Molly.
Okay, so reasons why you should really consider buying Square stock, the pros. They really have better momentum than their competitors throughout all of 2020 so far. Their numbers have been better than anyone else in the industry, and they really are the leaders right now in the industry for electronic payments. And that market is looking really bright. There's a lot of opportunity for them to keep growing. The electronic payment market is not going anywhere, and it's only going to continue to grow, especially in how kind of remote and technology based that our society continues to move. They're very focused on small businesses. Those are the people who generally utilize their products with the hardware and the software payment options that they offer, and there is a lot of opportunity there. There's, you know, so many different kinds of small businesses, and it really is something that exists all over the place, not just here in the US, but also internationally. They have multiple revenue streams. So they also own Square the hardware and their software options for sellers, also owns two other companies that produce, more revenue streams for them. So Weebly is a site builder tool, which also just kind of adds to this overall suite that they offer of tools for sellers. So not only could you use their payment options, but then they also have this option to use a site builder, perhaps for their website for their business. So another option there that is producing revenue. And then they also own Cash App, which has been a really great investment for them. Cash App, if you're not familiar, is a person-to-person paying tool. So much like Venmo, you can pay, your friends, family, anyone really who has a Cash App account directly. Bitcoin is also tradable on Cash App, and that has been a really strong source of revenue as Bitcoin continues to become a more popular payment and investing tool. They're really a high growth company with a very highly scalable business model. Their business model is pretty simple. They make money off of the hardware, subscriptions, services, and that is scalable. It's not like they have a really tight profit margin that makes it really hard to expand and grow. They're also very well suited for international expansion. So right now, the vast majority of their revenue, I think it's like 90% comes from the United States, but there is a lot of potential for that to expand into other countries, which just means there's a global opportunity there for them to continue to increase business. So I want to draw attention to this graph down here that shows their adjusted return. So the blue line is Square, the green line is technology industry as a whole, and then the S&P 500. So it is greatly outperforming the S&P 500 in this past year by 183%. And they're also outperforming, again, was saying that they're a leader in the industry, they're outperforming the sector as well. So it's a good sector to invest in because it is doing even better than kind of a baseline for the market with the S&P 500 is doing, and it's doing really well. Now, some people say that that is a reason to short it, that it's overvalued and it's going to go down. But if the people shorting the stock are wrong, then they're going to miss out on they're going to owe a lot of money, they're going to lose money, and then, people who are investing now are going to get to see that return as it, as a lot of signs point to, continues to grow and be a strong stock in the market. And then I'm going to pass it to Rodrigo to talk about the cons.
All right, and now moving on to the bearish argument, some of the negative aspects of investing in Square. The first one, and I think the biggest one financial analysts are looking at right now, is the level of uncertainty with the stock price that we're seeing. Their PE ratio, their price to earnings ratio, is really through the roof and just doesn't really correlate with the numbers that they're reporting on their income statements and balance sheets. So that has led to a lot of speculation as to whether the stock price will just go down eventually when everything settles out. Something that Molly was talking about was that there's a high amount of people that are shorting the stock, which also leads most analysts to think that it's eventually going to drop in price. And then also, like Molly said, that can either turn out bad for them or turn out good for people that have faith in the stock. Another thing to look at would be the price to book ratio. The price to book ratio is higher than the competitors in their industry, which also leads to uncertainty in the valuation of the stock. Price to book ratio, I read somewhere in an article that it's not really the most reliable form to look at. It's better to look at return on equity as a ratio that you want to base your valuation off of, and return on equity compared to Intuit is also pretty low, which is bad, and it's comparable to PayPal and Venmo, but PayPal is making way larger amounts of money compared to what Cash App and Square are making. So moving on to from there, we're going to reliance on small merchants. So this is Square mostly doing business with small and medium-sized businesses. It's been problematic during the pandemic, specifically because these are the businesses that have been hit the hardest, which is why Square's hardware and actual software for POS sales has gone down. And then that moves on to what is seen largely as a positive, that they diversified and then created Cash App, a competitor for PayPal. This has really saved them this fiscal year, and they just keep growing quarter after quarter due to the success that they're seeing with Cash App. So looking at it from a bearish point of view, a lot of analysts are saying that maybe they're putting too much attention and effort into Cash App as opposed to their original business model, which is just a Square POS terminal. So that can be seen as a negative because you're going up against the much stronger competitors, which would be Venmo, and then major banks like Bank of America, Wells Fargo, pulled together to create Zelle, which is also really big in that industry. They don't trade publicly, but all of those companies do great, so they're very financially strong. And then some of that growth that we're seeing from Cash App either way is due to something that has nothing really to do with Cash App or Venmo or anybody really. It has to do with Bitcoin volume just growing out of nowhere and then becoming much more valuable over this past year, which correlates with the growth that we see in Square's stock price. So the way that I'm looking at it from a negative point of view is that that it was a great move by Square to make Cash App and then have a different revenue stream that way. And then going into Bitcoin early, they went into Bitcoin and allowed it on their platform back in 2018. But Venmo and Zelle and a lot of these companies are already catching on. PayPal is planning to, I think they're already, in October, they announced that they were going to allow Bitcoin on their platform, and Venmo will start early next year. So we might start to see them grow exponentially and maybe just wipe Cash App off the map. We'll have to wait and see about that. And yeah, that's Cash App is a huge positive for Square, but it also comes out as a negative when we look at it through when we look at the numbers very specifically, like trying to break everything down. Their success is being compared against their competitors, not against PayPal, which if you compare it to PayPal, PayPal is outperforming Square by quite a bit. So if they keep focusing on Cash App, then we might run into a lot of problems if you are investing in this stock. And then the last one that I wanted to point out is CEO Jack Dorsey. He is actually also a CEO of Twitter. This usually doesn't inspire a lot of confidence in investors when the CEO, the main guy making decisions about what the company is going to do, has multiple things on their plate and doesn't have their mind directly invested in Square. So obviously Jack Dorsey's not going to abandon Twitter. Twitter is basically where he makes all of his clout. Square was a venture that turned out to be quite successful for him. And this year they're experiencing great growth, but I don't expect him to just focus specifically on Square. Maybe a change in leadership would help to, or have a sole leader, new CEO at Square specifically, and have Jack Dorsey go to Twitter would help put investors at ease, knowing that it's getting its full attention. But as it stands right now, Jack Dorsey has both huge companies in his hands right now, and he's trying to run both of them. So that doesn't inspire a lot of confidence. Those were the positives and negatives that we were able to come up with for you guys. We'd love to hear what you have to say about that. Would you invest? Would you avoid? Let us know in the comments. Thank you guys for listening. Have a great day.